Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. I've given on 16th of November the session-wise forecast and also the expected range in which the currencies could move during my Asian session live market analysis and the forecast for the week. And today we are on 20th, the weekend time. I'm going to review the forecast, what I have given it on Monday, and trying to find out how exactly it has gone in line with that of the actual market. Also, I will try to do the market reading for today and try to give the forecast, how exactly the market is expected to move in coming days. Besides, I'll also give the trade recommendations which can be carried out in a demo trading platform in order to understand the reliability of the forecast. So I can be contacted through my email ID, dr@i-knowindices.com, or my Skype chat ID, iknowindices@hotmail.com, through which you can contact me live and try to get any of the reply for the questions you have in your mind. So my trading system will be of three components, namely the derived forecast for a day, and we do the market reading by using the initial lows and the highs measured around 3:30 GMT, and then try to compare it with that of the live market condition using the live market code page and find where exactly the players are taking the market, either on the upside or on the downside, so that we will be able to take appropriate trading decision. But in the event, if the market goes against our expectations, what is the trading strategy we can use so that we will limit the risk and try to use the trading strategy to earn during either way moves of the market? Irrespective of the market condition, we should be able to hold the position with a less loss, and that will be a apparent loss. And once we handle the trading strategy properly, we'll be able to earn in any market condition, any position, we'll be able to earn the profit. That's a basic objective, so that once you are able to understand the market very well, then the market fear goes off. Once the market fear goes off, then you find that invariably we find sensible trading decisions are coming in our mind. Most of the traders lose money or avoid taking the great trading opportunities, mainly because of the market fear. Because at any given time, the market shows the uncertainty. Suppose you look into that of euro, look into that of GBP, it might appear it can go up or it can come down. Every time you will come across the uncertainty when they are holding it. But we need to know which way the players are going to move the market, either on the upside or on the downside, so that we will be able to plan our trades accordingly. And that is a basic idea of giving the forecast. So how exactly the session start time, they will show the market and then swing either near the low or near the high, and then make the late part of the session the opposite to that of what they have done it during the earlier session. So this is what happens every day. So early session moves will be opposite to that of the late session moves. That means during the early session, if they swing near that of the low, then they are likely to gain the levels towards the late session. So if you want to trade in the case of the majors, enter either during that of the early session or during that of the late session, not during the mid sessions. If you handle the positions during the mid session, invariably it will test your patience during the late session. So calmly wait for the late sessions to come and then try to initiate either closing the position with a profit or taking a new position or whatever it is. If you missed the session, doesn't matter, you just keep awake yourself or be active during that of the next session, and so that you'll be able to take the position during the early part of the session and close it by late session. That way, we will be able to easily earn a swing trade profit. So we are able to get a definite time frame in which we will enter into the market and exit out of the market. So the first 1.5 hours during that of the early session, we can enter, and the last 1.5 hours of the closing of the session, we can exit out of the position. So if you keep that in mind, you will be really holding the position calmly. After taking the position, when the position is not making profit, you will be able to understand, okay, they are just holding it, inducing the traders to liquidate the long positions by losing their patience. Later on, by late session, they will gain the levels or drop levels. So that way, you should be able to understand the market, how the players are making the moves. It is a man-made market. So automatically the players with a big volume move the market, and we are only just following the market. And everybody says that it is a huge number of traders who are moving the market. It is not that way. So it is mainly the impression is created. Everybody is trying to trade, so automatically the market can go up or down. That is what it gives that impression for that of the traders. But actually, what happens in the market is the players are the only people who can place a higher level buy or a lower level sell. When they place a higher level buy, automatically the market pushes upward. When they keep a lower level sell, the market comes down. This is how they make the swings in the market. And also, in order to float the market, give that impression to the traders it is active, they do the circular trades among the banks. That is, they sell from one bank and buy it from the other bank, and then sell again from the other bank and buy it from that of the third bank. This is how they do the circular trades. By that, they don't lose or gain anything, and they give only that impression to that of the traders. Market is very active. In that process, what happens? You come across 4 trillion volume is happening in the market, and those volumes, 2/3 and more than that, is of the players only. So they are not the actual volume you come across in the market. The actual volume of the traders will be less than 1 billion, because we know very well the players do the circular trades and float the market, and they induce the traders to commit the positions, and later on they act against the traders and earn money when they become surprised and do a distress trade. Day in and day out, they do the same, but we need to find out which way they are going to move it. So as long as the players are also human, and they are also being influenced by that of emotions and also various extraneous factors, probably the data release or whatever it is, and economic conditions, and also the requirement for the trading and earning conditions, and also the urge to earn more and more money and become #1 in the world. So those stress will invariably work on those players also. In turn, they will pass it on to that of the bank dealers who sit in the deal room and try to place the orders for that of the traders. So here you come across the study how exactly the players are going to push the market. So they will swing near the high and then slide towards close. This is what it refers. So around 0030 to 2 GMT, they will be making a higher level swing, then slowly come down, and then from 6 to 7:30 GMT, they will make a downward stop or make a swing closer to that of the low. This is how you find the swing and the slide. Then swing and rise, they will make the lower level swing and induce the traders to liquidate long position by testing their patience, and also give that impression that support turns resistance. So euro may not be able to rise. That is what they will give the impression. And later on, you find when the traders commit sell position, they rise the market and induce them to do the short covering. So once the market goes up on Monday, that's what happened. Then traders thought that, okay, euro and GBP will gain more. So immediately what they had done on Tuesday and Wednesday, they were talking about that of FOMC minutes, and then started making the slide before that. Then afterwards, what happened? After that of FOMC, they started gaining the levels. Now, on Thursday, also they gained the levels nominally, and we are on Friday. So, what is expected to happen during today? So, they are expected to make a swing and rise move during the Japanese session, and then from the higher level swing, they might slide to induce the long holders, test their patience, and liquidate the long positions. And they will absorb, the players will absorb all such sell positions and also long liquidation, and then push up quickly during that of the US session. And what happens? The traders who have gone short, they are not done the closing of the positions. They will come for short covering. So what they have bought it during that of the European session at a lower level, they give it to that of the traders who come for short covering. So this is what they do it in the market. Buy low and book profit at the higher level by pushing the market on the upside. But we think that market goes by technical moves and fundamental moves and things like that. What happened to that of the fundamentals on FOMC? Actually, when it was released, market came down drastically. But for FOMC meeting minutes, market has gone up. So the same meeting, they released the minutes, but market has gone up. So during the FOMC, they said that there is a likely chance by December they will just increase the interest rate. They could take an appropriate decision on the interest rate. What happened yesterday when it was announced, on Wednesday when it was announced, the same meeting, the minutes were announced and they're given a different interpretation. So if somebody sneezes also, they will give some attribute. If somebody cries, they will give an attribute. If somebody appears sad, they will give some attribute and move the quick moves in the market. And later on, when they become cheerful, they will simply make it the opposite move and simply say that economic conditions are based on the emotions of the human. How can economic conditions vary depending upon the emotional condition of the Fed chairman or anybody for that matter? And simply when they talk in low tone, they say it as dovish, and when they will give a vociferous talk, they say it is hawkish, and all such attributes, the behavioral attributes, they try to give it from time to time. And the traders really think that it is extremely difficult to understand the market every time. But if you understand that it is a man-made market and somebody is behind in pushing the market on the upside and the downside, and based on his cunningness, we can understand what he's going to do next. So what is the cunningness here? They pretend as if the market is going to drop. Euro is going to drop below that of 1.07, 1.0650 and go down up to that of 1.0625 before FOMC. Then people will think that, okay, it is going to drop big. They make a false move before that of the data release. And before the data release, no trader will take position because nobody wants to take a risk that way. So in that process, what happened? They only push the market on the downside. If there are stops, those stops will be hit and they will buy all those stops. And later on, after FOMC, they only use the media to propagate their feel about the market. So immediately they say, no, it's not hawkish, it is dovish. Simply they give all such attribute. We don't have any yardstick to measure whether it is dovish or hawkish. But simply when they shout loud dovish, then it will be hawkish. When they calmly say dovish, it is dovish. When they vociferously say hawkish, then the market might go up. But if they say simply in a low tone, might be hawkish, then it will come down. So it is a question of simple expression by which they are making up and down moves in the market, and closely monitor the lip moves of the Fed chairman and all other people who are interested or who are in charge of making financial decisions. So that way also they said when Ellen was making a statement, they made a remark pertaining to that, an attribute. So you find that more and more of attributes come out when the market is really uncertain. Then what happens? Then people wait for such attributes to happen, wait for such people to speak, and you find those people speak in different forum. So everything is being listed. So all are waiting for that new listing to happen, a new week what they are going to speak. After that, what they are going to speak, totally forgetting the economic condition is not ruled by that of the speeches. If that is the case, everybody can continuously talk so that the economic conditions can grow like anything. It is a productivity, and people have to look into that of the productivity, not on the interpretation pertaining to that. So ultimately, the projections are different from that of the interpretations. So these interpretations, they give it as if they are the projections on the economic conditions, and then try to deceive the traders once they have committed the positions. So keep in mind that the players will play a false game against us. Every 30 minutes, they check how much of traders' positions are there. Depending upon that, they make the moves in the market. But the big moves happen during the early and the late sessions, during the or in a particular session, because towards close of the session, they can just squeeze on the upside or on the downside and give the time frame for that of the traders to close the position. Similarly, by the day end, they will try to view the push because the traders have to go to sleep. And also, if they hold, the overnight interest is charged. So he is forced to close the positions. So you find that the market, they push one side for some time, and that is mainly counting the timing. So these timings, if you know, okay, when they are going to make the push, they simply say that it is a London close time and it is a New York open time, it is a Frankfurt open time. They are all mainly to confuse the traders so that they don't identify the exact timing. So what we need to understand in the market is how exactly they are going to play. So whatever be the forecast, we try to use it, it can go wrong. So what do you have to do? We have to use the limiting factor, which can really limit our risk. That is the utmost important thing. That is why I always give importance to that of the trading strategy. And once the position is hedged using the trading strategy, simple hedging in the same currency pair, then we will be having two positions, a buy and the sell. Trade like a person who is holding a buy position in the market and another person holding a sell position in the market. Then you will come across various ideas coming in, and we'll be able to really and nicely book profit. But many of the traders lose patience, and what they do is they go in for an averaging trading. So if you avoid doing averaging trading, you will be able to really earn well the money from the other market. And if you simply average it without understanding, the market can make every day about 150 pips. Every week they can make about 350 pips. What is a hurry in averaging? If you take an appropriate decision on that, you will not do the averaging. You will take only one position, and either way you will try to trade and earn the same money without adding more positions. Suppose you have got a buy as well as a sell, then the market has come down, the sell will be making profit, and keep stop at entry and watch how far they are pushing down. Then once it is over, and stop cutting the new low for more than 2 hours, and you find that they started making intentional moves, slowly gaining, not a quick drop, slowly gaining. Then we understand, okay, that is the end of the intentional move. On the downside, we will close the hedge with a profit and keep another 30 pips below the hedge order. And once they start making an intentional move on the upside, we are able to happily earn money on the buy side also. So book profit on the sell side, book profit on the buy side every week. And we find invariably Monday and Tuesday, they are making the downward move. And Wednesday, they just make either way stop. Then Thursday and Friday, they are pushing it upward. Is it difficult to understand? I don't really think so. But only thing is, if you divert our attentions by looking into the other charts, looking into various type of statistical studies, you find, okay, this time this statistics might be working, the other time the other statistics might be working, MACD might be working, parabolic curve will be working, and the pivot point might be working. So you go in for innumerable search endlessly. This is what happens in the market, unfortunately. Now, with regard to the levels in which the currencies are expected to swing in this week, they came down up to 1.0625 and then started gaining the level, and they are expected to gain further levels above that of 1.07 today. Then, in the case of GBP, they came down to 1.5156, closer to expected low, and then started gaining it, and they are expected to gain further upward move today. And in the case of yen, they came down, and another downward push they are likely to do it, and probably to 122 or slightly below as a stop, and then start gaining the level again. So that way they will push down the yen crosses to start with when euro and GBP are gaining, and later on they will silently gain the levels in the case of USD yen, USD CHF, USD CAD also. That way they will be able to handle all the yen crosses, then European crosses, and the commodity crosses. Then in the case of Canadian dollar, they came down to 1.3247, and then they went up to 1.3355, and they are likely to come down after this. At the moment, you come across that they are showing positive net change both in USD CAD and USD Australian dollar, but other euro, GBP, USD HF, they are making nominal USD gaining move or almost flat. They are expected to gain the level slowly from the late session in the case of euro and GBP, not dropping much USD and USD CHF. So when euro and GBP gain, don't immediately go in for selling. In the case of USD and USD CHF, they may not make appropriate move. Now coming to the market reading, euro low 1.0711 and the high is 1.0738. They are not breached the low or the high. In the case of GBP 1.5272, actually in the put page they are showing yesterday's low and yesterday's high, and the one high is 1.5291. They are holding it, that they are not breaching it. And in the case of yen, 122.84, they just breached it by 3 pips and came down to 122.81, indicating that they wanted to drop USD yen. And already they have started, all the three currencies are showing negative net change. This is how they crosses, they will come down. Then the high is 123.05. They are likely to come down in the case of USD yen initially, and towards US session they will firm up again when euro and GBP started gaining more. Then USD CHF 1.0128 is the low, 1.0154 is the high. They are not breached the low or the high. Only in the case of yen they are making contrarian move. Then Canadian dollar 1.3284 is the low, 1.3308 is the high. They are not breached low or high. Australian dollar 0.7184 is the low, 7197 is the high. They breached the initial high, went up to 0.7211 and holding closer to the top 71.95.97. So they are likely to take it up. You know that commodity pairs lead the rally and lag behind. So they intend to gain the levels, which is very clearly indicated that they want to gain the levels in the case of euro and GBP and also Australian dollar. Now the recommended trades. So you can keep closer to that of the low to start with a buy order. 1.0712, 1.0711 is the low, and 30 pips below the hedge order, and 30 pips above that of the exit order. That way you can just keep the orders. And in the case of GBP, 1.5272 is the buy order, buy limit order, and 5302 is the exit level for the 30 pips above, and 30 pips below will be the hedge order. And also in the case of Australian dollar, I just kept it so that by 6 GMT they could make a small push on the downside and create a false move, come closer to low in many pairs, and probably they may make a brief downward stop in the case of Euro or GBP and hit the stops wherever they come across. The stops are in plenty, and then start gaining the levels during the day. And during the late European session, they are expected to make a small dip, inducing long holders who are not willing to book profit or just close the position with a small loss if they had taken the buy position after the rise instead of near the low. If they going for a breakout trade buy above that of the initial high, then what happens during the late session? They will come below that of the high, initial high, and just hit their stops, and then start gaining the level during the US session. So always keep in mind how the herd of traders are trading in the market. The players are there to do the trades against. So that is why they always say that we are on the sell side. Okay, these are all the market timing slide. So if you've got any doubt, you can quickly make a note of it. And these webinars are being recorded, and this will be available in the watch list in fxtrade.com. You just go to fxtrade.com and click on the header, analysis and the insight, and below that you come across the sub menu. In that you click watch list, and in the watch list, soon after the completion of the webinar, you will come across the recording of the webinar is being displayed. And also I'll display the link in my blog page. There again you can look into the of the webinar and find out if you are not followed it properly. Otherwise, some of the important information regarding the trades, etc., if you want, you can always look into that and get the details. Then I'll come back on Monday, 23rd of November, and give the next webinar. Now I'll try to answer to the questions which are asked here. Jag has got a question. Do you think that the possible December liftoff has already been priced in US dollar CAD and pair will reverse from 1.33? Yes, it appears most likely that 1.34 was the high and they wanted to come down again and make USD weakening move in the case of USD CAD. Then Haken. While determining the initial high and the low is set in a period of 00 to 3:30 GMT or set in the previous day 22 to 3:30. The live market code page, it is 22 to 3:30. No, you just note down the initial lows and the highs by 3:30 GMT. The previous moves, you need not worry about it, the highs and the low. Exactly at 3:30 GMT, whatever the highs and the low in the code page, you can make a note of it. So no more questions. If you got any question, you can ask me. I'll answer to the questions. I'll show meanwhile the forecast page. You can find out how you can follow the forecast. Okay, the trades I will show you. The trade recommendation for those who wanted to make a note of it. Then the initial lows and the highs which are set today. Every day you can make a note of it and compare it to that of the previous day and find out where exactly they are taking the market, so that you will be able to understand the weekly scenario. Every week you will be able to understand how Monday they just drop the market, Tuesday they make further drop, and Wednesday they just make further drop during early session and start gaining it. And if there is a data release, they wait for that. Afterwards, they quickly gain the levels. And then Thursday and Friday, they go upward. This is the pattern they are following. So these are all the ranges in which the currencies are expected to move. The lower levels they've completed in the case of Euro GBP and Australian dollar, and they are likely to go up further. And the next week is going to be the last week, 4th week of November. They are expected to make quick aggressive moves at the upside in the case of numerator currencies. And you will come across the US dollar will have a mixed reaction because the numerators will gain the levels against US dollar, and the denominator currencies are expected to gain the levels coming as a denominator. As a result, what happens? They become weaker. Yen, CHF become weaker. Canadian dollar, nominally, they become weaker. Alternatively, they will make contrarian moves, up and down moves. So they will be making range bound, wide range swings. But Euro GBP and Australian dollar are expected to gain more levels. So no more question coming. So this is the forecast for today. So late European session, there will be a slide, and afterwards they are expected to make further rise during the session. So I take this opportunity to thank FX Trade for the facilities provided, and I'll come back on Monday and give the webinar for the next week, explaining the expected market moves and also the range in which the currencies are expected to move, and also how exactly we can do the market trading, and which can be implemented in a demo trading platform. So wish you all happy trading, wish you all happy weekend. See you on Monday.